SMB Investor with Nick Bryant and Sean Smith.
Hey everyone, you got Sean Smith here, managing partner at Search Fund Ventures. And today I'm joined with Jeff Driskel, who's going to tell us a bit about balancing both being a professional athlete and an independent sponsor and executing on some exciting deals. Jeff, I'll let you jump in, give your background and tell a bit of your story, and we can go from there.
Yeah, Sean, thanks for having me, man. I've got the opportunity to listen to a couple of the segments that you've put out there in the last couple of weeks, and it's been fun to watch the lineup of folks that you've put together. So honored to be here and excited to wrap it up a little bit. As Sean mentioned, I'm an NFL player. Been playing in the NFL for the past 9 years. Been on 8 teams in 9 years. Hoping to get a 10th, and my plan has always been to play as long as they let me. So that's still focus number one, where I spend most of my time, energy, and thoughts going towards that world. But in the last few years, the average career in the NFL is 3 years. I said it is going to end at some point, whether it's after 9 years, 10 years, 13 years. And I spent a lot of time and thought about what I want my professional life to look like post-ball, and really settled on this small business acquisition space. You know, we were talking pre-call about the layers of, what ETA is, what search is, what buying a business is, and landed in this world, and it's evolved over the past 2 or 3 years, but I'm having a blast doing it.
Yeah, and you've got a pretty unique model of how you put together deals. You've got a great ability to source qualified operators as well as qualified deals. A lot of folks just have to focus on one side of things. So how do you kind of manage pulling together both sides of the deal?
Yeah, so just a little bit of background of who we are at Four Pillars. Sean, you mentioned independent sponsor. 12, 18 months ago, I didn't even know what that was. So essentially what we do is find deals, we find operators, we raise the cash, get it to close, and then we provide support post-close, in an advisory board type of role, and really just whatever is needed to support the operator. So there's no one size fits all for what we're going to do post-close, but that's really what we are. And it started with one business. I approached my brother about a little less than 2 years ago, and I said, hey, I've been spending my days for probably the last 3, 4, 5, 6 months, whatever it was, learning about the self-funded model, love the economics, love the idea of operating a business, and love small business in general. So I said, hey, I'm not so naive to think that I can run a business while still playing in the NFL. And I approached him at the right time, and he loved it as well. And he said, hey, let's do this thing. You write the check. I'll run the day-to-day. And we found an accounting and bookkeeping company operated for the past 14 months. So that's how it started. And then we kind of said, hey, we're pretty good at this search thing. Like, why only do it one time? Right. And, we were speaking with our network about, hey, this is what we did. And a lot of other people had that same light bulb moment. That sounds awesome, but I don't want to search for a year, right? I don't want to give up a year's salary. I don't want to become a professional searcher. I want to be an operator, but I don't want to be a professional searcher. So that was kind of the genesis of our solution is, hey, let us help you search. You don't have to become a professional searcher, but take advantage of self-funded search economics. So that's where we're at now. I'm sure our model will be dynamic and moving along the way, but we're excited about where we are. And, in the short term, there's definitely a need that we found, and we're hoping to serve that need well.
Yeah, it's a really strong model. You see there's a handful of firms in Chicago that have taken somewhat of a similar approach. I mean, NextGen has become kind of the big gorilla some people call it kind of the operator-led private equity or kind of on-staff searchers in a way. Then you've got a firm called Housatonic out on the West Coast. And it's a really good model because, just like you said, there's folks that are probably really qualified to be great operators of businesses, but that search skill set is almost like a blip in the operational life cycle of a small business acquisition or small business ownership, right? So if you guys, and I know from our conversations, you're building out some great infrastructure, but if you can nail that down, it sounds like the thesis is you can, place a lot of really great people at great companies.
And like you said, it does start with the people, right? Like, we don't have a general thesis on, hey, we're only going to do accounting or we're only going to do this, that, or the other. We want to find really good people who have direct experience or have done something exceptional in their professional career beforehand, which makes us think they'll do it again. So we find that person first and then model the search from there if we agree with the thesis.
So just to clarify, does that mean you form the thesis to some degree alongside the operator? So you're finding the operator first in many cases. Is that Fair to say.
It's discussions before there's ever an agreement to say, hey, let's go do this thing together. We don't want to do restaurants. We don't want to do retail. We don't want to do e-commerce type of acquisition. So we're generally agnostic in our view. And then basically if that individual that we're working with has a compelling reason for a specific industry and we think that they can execute on it and we trust them, then let's go.
Great. So one area where there's a ton of overlap between kind of the approach we take as a passive investor and the approach you take in being a more active deal maker is that we make such an emphasis on evaluating the acquirer, the sponsor, the searcher, and that their skill sets are not only a great fit for the company they're acquiring, but that they have the requisite experience to give us confidence that they're just not going to break anything in the first place, right? So I'm sure. Yeah, go ahead.
No, just kind of to expand on what you were saying, like when we were going through the accounting acquisition, Jason's not an accountant. He's not a CPA. He's never worked in that world. He worked in a white collar environment with high income type of coworkers and other people around, but he was never in that world. But the interviews with the banks and the people that were given the money, it wasn't about that necessarily. It was, do you understand a P&L? Do you understand a balance sheet? You know, can you create a culture that's going to attract talent, right? So we figured it out pretty quick that the people that are stroking checks are worried about who's in the chair. So that's why we fill that bucket first is, hey, let's find the operator first, because we're going to have to go sell that to investors, you know, like yourself. That's going to be your first question is, hey, tell me about the guy running the show. So that's why we address that first.
It's a smart way to do it. And I think what I'd love to hear more from you about is how you've kind of created that criteria for what makes, a great operator. I think a lot of folks that watch this that are in the investor network could benefit from understanding how to think through, who is someone that can drive a great culture or who is someone that can come into a business where they may have not a ton of experience, but kind of bring it to the next level and not break it.
Yeah, I've been in the professional sports world for the past 9 years, playing Division I football for the 5 years before that. You always hear from employers that are trying to recruit college kids and guys fresh out of college, like, hey, it doesn't matter what the widget is. You have excelled at something very, very difficult to do for a long period of time. You put in so much work to get to this level that very few people are capable of doing. I don't necessarily care if you know how to sell whatever. I'll teach you how to do that. You have the makeup to go be a high performer. And for a long time, that was really hard for me to like conceptualize that, these soft skills are just as, if not more important than hard skills. So yeah. So to answer your question, we're looking for people that have done hard things, done them well, and have done them over a long period of time.
That's a great formula. And you see folks in the ETA space who seemingly, end up being pretty successful coming from sports backgrounds, coming from military backgrounds. There's a lot of, I would say, overlap when it comes to, like you said, enduring some of these swings and these challenges while still maintaining, a level head and a great culture.
People have to understand that there is not what if there is a challenge is when the challenge happens, how are we going to overcome that? And if someone can say like, I did that before, that won't be that won't be an issue. I'll figure it out. And this is kind of my thought process for figuring out how to overcome challenges. If you've done it in the past, you should be able to do it in the future. And for us at Four Pillars, we're going to help you do that because we've done it as well.
Excellent. Why don't you talk to us a little about, a couple investment theses either you have worked on or you're currently working on with operators and what's getting you excited?
Yeah, so we'll start with the accounting and bookkeeping company. And again, I hate to beat a dead horse here, but it started with like, what is Jason comfortable with? He was a college football player. He played quarterback at FAU, but right out of college, he took a position with RBI, which is Popeyes, Tim Hortons, Burger King, private equity backed brands, where he was in corporate finance and strategy. So he was working with a spreadsheet behind a computer a lot of times, worked in big teams with high performers in a white collar environment. Ended up taking a position with GoPuff, which is a big tech company. It's a rival of, call it, Uber Eats. And again, he worked in the office of the co-CEOs and in a white collar environment, right? So he was comfortable in that space. So we said, let's go find something that fits you. Where are you going to be comfortable? Working day to day and with the types of people that are going to be in a white collar type of business. So we wanted some type of recurring revenue, and we wanted something that is relatively recession resistant. Everyone has a different definition of that, but in our mind, you have to do your taxes every year, whether you're an individual or an entity. And, people don't like to fire their CPAs because it's a pain. So sticky, recession resistant, white collar industry. And we kind of fell into accounting based off of those criteria.
That makes good sense. And, definitely rings well with, I would say, a lot of the mantras that folks preach in the both traditional and self-funded world. You want to have that recurring revenue. You want to make sure that it's non-volatile. But I think, like you said, kind of taking an operator first approach to defining that's unique.
Yeah, to answer the second part of that question is kind of where we were with the first acquisition. You're aware that, we're under contract on a deal right now, and it's a roofing company in Central Florida that does exclusively re-roof and repair work for existing homes. So there's no new construction exposure in the business. It's purely, if there's an issue, we'll take it off, put a new one on, and you're good to go. So basically, the question is, like, construction is not recession resistant. What happens when the economy takes a turn? Well, the way that we present it and the way that we think about it and we're comfortable with is, if you want to have homeowners insurance, the carriers are requiring you to get a new roof every 15 years. So it's gonna turn around. There's storms in Florida. You're not necessarily getting the same customer year over year, but at the end of the day, if you want to have homeowners insurance, which everyone does, you have to get a new roof every 15 years. And the Central Florida market is huge. And the county that this company's in is, I want to say, it's like the 10th fastest growing county in the country and one of the fastest growing MSAs. We're very comfortable with the demographics, with the business itself, but also the industry, where it's not the exact same type of revenue as the accounting company. We see it as, it will turn over and people have to do this work even if they don't want to.
There's the mission critical aspect to it that means you can't not do it. You can potentially delay it, which I guess, hypothetically you can do with your taxes as well, but it's probably not a good idea. But at the end of the day, whether you're holding off for another year because you think interest rates are going to go down or something similar, you got to do it at a certain point in time. So yeah, it makes a lot of sense. We like that thesis a lot too, and we look at lots of companies that have that mission critical sort of dynamic. And in fact, we've been looking at a company in the machining sector, and a question we get frequently is, well, how are things going to work when kind of these tariffs ripple through the supply chain, right? A lot of the inputs come from Canada or from Mexico. How do you think about that? And certainly the question is, are people going to delay purchasing? If so, for how long? But what we can get comfortable with is that they're going to need to buy the parts eventually because they are mission critical. So you can always kind of come back to, sure, it might be deferred or it might be delayed a bit, but it's not going to go.
Yeah, it might look a little different from here, but at the end of the day, the work has to get done. The parts have to get bought. So I think we're aligned there.
That's for sure. So I guess tell us a little about, where do you hope Four Pillars is going to be in the next 5 to 10 years?
We definitely trying to get through this deal, get it to close, right? Every deal has a life of its own, and there's no two deals that look exactly the same. So we're in the middle of a raise, in the middle of due diligence, and going through that process, and things are going well. We're also engaged with another operating partner who has a completely different type of search parameters than the guy that we're working with in the roofing space. So in the next couple of years, it's hard to say what it's going to look like in 5 to 10 years. But for the next few years, we hope to do 2 or 3 deals a year with really qualified operators. We understand that it takes a while to find an operator, to find a deal, and get it to close. So we're not going to, give some lofty goal of, hey, we have to do 10 years in the next year or else it's a loss. And we hope to build out our track record over the next couple of years. Down the line, does our model change? Maybe. Do we go up market? Maybe. We will see. But right now, what we're worried about is working with the operating partners that we have, searching for new operating partners that we think will do a great job, and providing value, not just pre-close to get it to close, but also post-close and helping them go full cycle. So everything for us is our reputation, and we hope that our reputation continues to improve. But then we have a longer track record. People see the staying power, and really see the value that we think we can provide.
So what would your tip be for an operator who's kind of just getting into the space? Maybe it's someone just starting a search or someone who's looking to kind of join a firm like Four Pillars. What would your tips be for them as they kind of get their feet up?
Yeah, as a person that is doing a search by themselves, you can't half-ass it. And I was looking for a better term, but that's really what it is you have to go all in. I couldn't imagine a world where I was, searching nights and weekends and expecting to find a really good company, in a year or less. I just don't think that's realistic. I think it happens, but I think it's a few and far between if you think you're going to keep a full-time job, and expect to find a really good company of your dreams in the next couple months. I don't think that's realistic. So I would say go all in, educate yourself for 6, 12 months before you dive in. But signing a personal guarantee is a big decision to make, right? Like that's a big deal that has consequences for a long period of time. Make sure you know exactly what you're doing, criteria, have a reason, have a way to back it up, and go all in on your search.
Anything else you want to leave us with before we hop off here?
No, I mean, I say no, but I'm gonna say something. Kind of piggybacking on my last statement, going all in, right? Like, so just from my personal experience, I wanted to be in real estate for the first few years of my career. I got a little bit of a nest egg. I wanted some yield outside of stocks and bonds. And I learned a little bit here and there about real estate, did some flips, did some single family holds, invested as an LP, thinking that when I was done, I was going to be on the GP side. But I never fully immersed myself. I think that if I continued on that same path where I just thought I was going to learn the industry in and out by osmosis, I would have been in a bad position when they tell me that I can't play anymore. So I've really used my off seasons to my advantage. That's one of the many beautiful things about pro sport is you have a period of time, 5 or 6 months a year, where you don't have any obligations. And sure, you have to work out and you have to make sure that your body's in shape and you're going to spend some time with your family. But I use that time to really understand this asset class. Is this something that I want to do? Made sure that my wife was cool with it as well, right? Like it's a big family decision, not just my decision, what I'm going to do. And really spent the time to self-educate, get on the phone with so many people and find your differentiator. Mine is that I play in the NFL. That opens a lot of doors for me. And I play that card often. But I think most people have a card. It might not be that card, but whatever you do have, find it and take full advantage of it, to get in front of the right people.
It's great advice. Well, hopefully folks that are watching this will find their card and be able to find some
Right.
good deals as a result.
That's right. Well, good deal, Sean. Well, I appreciate you having me. And for the people listening, please reach out to me. I don't know if Sean gives contact information out, but my email is jeff@the4pillarsgroup.com. And there's been tons of people that have poured into me. So I hope to be able to do the same in this ecosystem where it seems like it's the norm.
That's awesome. Thanks so much, Jeff.
All right. Thank you.